Hello, welcome back. This is going to be a short video, but I think it's an interesting piece of news that I was actually informed about by one of our community members. And it's about Cathie Wood of ARK, the ARK fund. She bought for $44 million of Nvidia shares after they beat earnings. So we can take a little bit of a closer look at what happened here. She jumped back into Nvidia. She has actually sold Nvidia some time ago. She jumped back to that as the popular fund manager purchased nearly 250,000 shares on Thursday across 3 ETFs. Actually, pretty much all the 3 well-known ETFs that ARK has: ARKK, ARKW, and ARKF here. So previously, Wood and her team were once upon a time holders of Nvidia before liquidating. Now, liquidating Nvidia turned out to be a good move, one of the scarce things that you see from Cathie Wood, making a good move. And since she departed, the stock plunged roughly 40%, so she would have lost a lot, although she's, I guess, used to that. Now, you will see here that ARK Innovation ETF purchased 191, is the bulk of shares really, and then 33,000 and 20,000 over here. And it looks like she believes this may be a good point to layer in positions for a longer term hold. So it looks like she believes that Nvidia is probably a better long-term hold, which it may be actually. But earlier in the week, Nvidia beat Q1 non-GAAP EPS of 136 by 0.007 cents here. And the stock was up after this one. Now, we have taken a look at Nvidia. This is obviously not the reason why I'm making this video, but we can just very quickly take a look at what is happening. Now, it's gonna be up because of this news, although people should probably be scared that she's buying. But it's actually up, and you will see in the 1-year chart that overall the stock has been going down tremendously, about 46% down right now, even after beating on its earnings. And you will see that the price to free cash flow ratio is 50, close to that. Price to free cash flow ratio is 56.9. PE, that is PE, that is price to free cash flow. And this is a company that is expensive. We have analyzed that in the past, and Cathie Wood likes expensive, but she, generally speaking, doesn't like free cash flow, and she tends to buy non-profitable companies that are not making any net income. Now, Nvidia is not such a company. Nvidia is way better here in the sense that they are a very profitable company making tons of money, so they are a good company to hold. The potential problem about this company may be the price that she's buying it at. From 9 to 27 billion in revenue. You will see here the net income has been tripling in the last 5 years. So the company has been doing excellent in terms of the financials, and you can even see here in the cash flow statement, for example, that net cash provided by operating activities has been increasing, and the free cash flow from 2.9 billion to 8.1, also great. But what is super important is making sure that we are not overpaying, right? And if you take a look at the revenue growth for Nvidia, this has been tremendous, of course, in the previous years, but you cannot expect it to grow 50 and 60% every year. So if we go with something more conservative here, something like, let's just say 12, 14, and 16, which is not very conservative actually, but it's much more conservative than what the company has been doing. And net income margins here have been at a rather similar level, about 25 to 35 in some cases. So a little bit, I'm gonna go something like maybe it's to 25. Grab all the range, 25. Let's go 35, 30, and 35 actually, so that we grab pretty much all the range here. And the free cash flow margins, I think I'm gonna go with 80, 90, and 100 here, and 13% for the annual return. And you will see that if we hit calculate, these are relatively okay projections, not super aggressive. Maybe the high ones are pretty aggressive, the other ones are okay. But even for our high estimates, we are very far from the current price. In order to reach the current price, what would need to happen? So let's just say that the revenue growth of the company was 30% a year, the net income margin was 35, I think that's fair, 100 free cash flow margin, and 13 for our annual return. Even then we are off. Our current price is more expensive, and if we seek the 10% annual return, it is probably only then, that we are getting a green over here. an estimate that is higher than our current price, because we are asking for less money in terms of our return on investment here. But yeah, if we go back to 13, we probably need something like 40% in order to reach the current price, I'm assuming. Yes, something near that. Actually, probably a little bit less, maybe 36 or something of that sort. Yeah, would still keep us in the range, maybe even 37. So you see here that we actually need something like 34, 36, 33, something of that sort in terms of revenue growth, in order to achieve this kind of projections for the current price. And so this one is expensive, and it is a great company, but it's expensive. Now, it's not a horrible investment. She has much worse investments. It's an expensive one to buy at the current price, but it's not a horrible investment because it is at least a good company. And she has had companies that are not making any money, and they may still be good companies, but they're extremely expensive for what they are. And it would take a lot of time and some faith for these companies to potentially actually start making money. So yeah, holding these kinds of companies is very problematic. But holding Nvidia, much better, although it may be a little bit expensive at the current prices. Again, the main issue for this one. But yeah, this is what I wanted to talk about in this video. Just a very quick overview about what happened here with Cathie Wood, because here moves are interesting. We kind of want to see what she invests in. It can kind of help us take the opposite position, maybe in some cases. But probably Nvidia is not a bad one. I definitely like the company, but again, it may be a little bit more expensive than I would like to get the company at. Really, the price may be a little bit too much. But thank you for watching this video, a quick one again, as I mentioned, and I'll see you in the next one, guys. Remember to like and subscribe, and I'll see you soon. Bye bye.